Welcome back, everybody. Today we are talking Bitcoin. We're going to do some on-chain analysis, then go through some bullish news, and then round it out with some chart analysis and price predictions, as it looks likely that Bitcoin will be dropping lower before we return to some recent highs. So let's dive right in. First of all, want to cover this on-chain analysis piece, and we do have a couple bright spots here. So the first thing I want to call out is the holders making money at current price. So we've seen this do pretty solidly just in the last couple weeks here. We have more than half of the Bitcoin holders right now in the money. I think this also, speaks to the amount of people we have holding 1 year plus. Obviously, Bitcoin at this time last year wasn't necessarily at the price it was now. And then in the last, little bit, we've had people accumulate at the 1 to 2 month holding period and less than 1 month. But I think this is bullish that we're seeing more and more people being willing to hold a year plus. We're seeing more long-term holders kind of get highlighted here, and the short-term buyers, short-term speculator getting kind of flushed out in the kind of wider statistical data. So that's always good to see. I think long-term bullish in terms of the underlying fundamentals of actually who's holding Bitcoin. The other thing I want to bring up, and we actually have looked at this in previous Bitcoin videos, but the total exchange inflows and outflows. Now, this is really important to pay attention to because this shows indications to sell Bitcoin or exchange Bitcoin, and then intent to hold that for a longer period. So just a few weeks ago when we were covering the same statistic, we saw a ton of exchange inflow, and that next following couple weeks, we saw that drop down around where we called it, about 28.5, and now we're actually playing back there again. We've been fluctuating, obviously, in this channel, and we'll cover that here in a few moments. But needless to say, we are looking more bullish this week than we did the couple weeks back. We now have more exchange outflows, which means that people are actually taking it off exchanges and holding that in a hardware wallet or somewhere else that they want to store it, whether it's MetaMask, etc. But it looks like inflows, at least for the time being, have been trumped by outflows, meaning more people, at least at this point, maybe have intent to buy rather than sell. Obviously, that can change in a day, so it's really hard to predict what's going to happen. But at the same time, interesting stat to look at, as that has fluctuated a lot in the last couple weeks. The bit of news I wanted to jump on here was JP Morgan's recent banking statement, banking review. So they said that crypto actually trumps real estate for them as a preferred alternative asset class. And this is really interesting, right? You have arguably the largest bank in the world, one of the most well-respected bankers, Jamie Dimon, coming out and saying that this is the way that the bank is going. And they actually came out and said that Bitcoin, according to them, has a fair value of about 38,000. That's, roughly a 30% upside from where we're at. So definitely something to consider, especially if they're saying that. A lot of people were joking on Twitter that that's a top signal. And, I totally understand that some people, will sell that news. So obviously to each their own. But I think this is kind of where it gets a little bit more interesting too. They kind of cite some of the reasons why they're not looking to private equity, private debt, and real estate anymore. And it's really leading from the lagged repricing of assets because of the rising interest rates. So now borrowing money has become way more expensive than it used to be. It's now at this point almost tripled the amount that you actually have to pay in interest on certain loans, especially business loans, especially investment loans. So it's definitely making it harder for them to make those margins on real estate, make that equity back faster as it used to be, at least in the last 5 years. So now they're looking to crypto. And I think this is kind of a really interesting point that they highlight in their review, but they also are saying that there's little evidence of crypto venture funding drying up after Terra's collapse. Now, there's a lot of speculation that over the next year, a lot of VC funding is going to dry up, especially for, high growth startups that aren't profitable. But they're kind of making the argument that crypto might be a little bit different. And, we do see that a lot with the recent news. Obviously, Andreessen Horowitz, you probably didn't miss this if you're following crypto, but they raised $4.5 billion for a record-breaking crypto fund. And obviously down here, it kind of details how they're going to split this up, but they have a good team behind them, and 4.5 billion is not a small number. That is quite a bit of money, and some of these crypto projects that are going to get much needed funding are probably going to be, potentially leading the way here in the next 5 to 10 years. So it's interesting to see some of these big investment firms with smart teams saying, hey, we're kind of doubling down on Web3 and the crypto space overall. So To Jamie Dimon and JP Morgan's point, we're not necessarily seeing that VC funding slow down yet, although debt has now become more expensive to acquire. The other thing I wanted to note, because I think this kind of gets lost in translation, especially when Jamie Dimon gets brought up, JP Morgan gets brought up, some big names, everyone kind of just wants to go full gung-ho, right? I think it's important to know that Jamie Dimon himself is actually more of a Bitcoin bear. Obviously as a banker, he needs to listen to his clients, he needs to listen to his teammates, but he made it clear, this is him directly quoted, "I'm not a Bitcoin supporter. I don't care about Bitcoin. I have no interest in it. On the other hand, clients are interested and I don't tell clients what to do." So his clients who have a lot of money are interested in Bitcoin. Therefore, his teams are building their kind of investment strategy, investment structure around that. He himself, though, is not bullish on Bitcoin. And a lot of times the JP Morgan, Jamie Dimon opinions get conflated, understandably, obviously, because he is the CEO. But at the same time, you have to kind of separate his mentality around Bitcoin versus the overall JPM strategy. And the last note on this piece of news that I want to mention is that we need to be aware that increasing SEC scrutiny is going to be coming to crypto and Bitcoin overall. This is from Hester Pierce. And so he said, this is the SEC commissioner. And he said that the U.S. has dropped the regulatory ball with respect to crypto. She said that the call on Congress to clarify the SEC's regulatory role so her agents can take on more proactive steps against crypto fraud going forward. So we are going to see more and more SEC regulation. I think that long term, this is going to be great for crypto. It's how we kind of get introduced to a more institutional audience. But obviously in the short term, it's going to create a lot of concern and a lot of uncertainty, which markets never like. But let's get into some of the fun part and start looking at the Bitcoin chart, start looking at where we could be headed here, in the short term and then in the long term as well. I think we're seeing a lot of calls for dead cat bounces. We're seeing a lot of calls for, a drop below 20K. We're seeing a lot of different opinions. And I think right now is the perfect time to start setting expectations of where we could go and then start building off your dollar cost averaging strategy or your, investment strategy based on that. Again, this is not financial advice, but I'm going to try to give you a good idea of expectations of where we could go to the downside, and kind of basing that off of what we've seen in other bull bear market cycles as well. So that's kind of what we're going to do. We're going to compare what we saw in the last two bears, and then kind of try to lay that over what happened or what is going on now to see where we kind of could find a bottom. So let's look at our 2013 bear here. We had a high of, roughly 1,000, almost $1,200 here. We come down, our low was, somewhere in this area around 130, maybe even a little bit lower. We had an 88% drop there from the bull market high to the bear market low. Now, if we come up here, this one's probably going to be in more recent memory for you all, but this is our 2017 bull bear cycle here. If we go to our 2017 high of about 20K, and then draw that down to our bear low, we're around 85% down from that all-time high at that time. Now, if you recall, we had about 87, 88% here, 84-ish% here. Now let's take that and say, okay, where are we coming down from 69K? So obviously everyone remembers 68, 69K, that most recent high in November of last year. And then now where we're sitting at least where we've touched is about 63%. Where we're currently sitting, we're around 60% down from the all-time high. Now, that may instantly cause a little bit of fear because you might say, well, now, Alex, we probably have 20% more to go until we bounce. The one thing that I will note, that's exactly what you should be thinking because that's kind of where I'm getting at. But at the same time, you need to remember that this percentage drop right here was higher than this one. And we've kind of seen that progression over time, right? Obviously, that we did have a bear bull back here, but, in terms of crypto adoption, it's not as relevant as these two. So that's why I use them. But at the same time, we have seen a decreasing percentage drop from that all-time high. So it would go along with that trend to say we may not quite get to, 85%, but I would say anything between, given that we're at, and let's just redo this again so that we can just have it up for ourselves. But, given that we're at around 60% down from that most recent all-time high and actually the overall all-time high for Bitcoin, given that we're only 60% down, I think that it's really easy that we'd see, something between 70 and 80% down from the all-time high. I think that might be a little bit aggressive going below 15K, but I would not be surprised. It wouldn't play outside of the rules of Bitcoin bear bull markets to have it drop well below 20K and let's say, bounce off of a 15, bounce off of a 17. At that point, we might be able to do a little bit more technical analysis. But right now, the focus is really on macro. How much more can we fall? We have interest rates. The next report coming out June 14th, 15th. I'll probably cover that on the channel. But at the same time, you guys do need to be wary that if you're dollar cost averaging, down this whole way, if you have been or are starting to, you just always need to be aware that of where our potential bottom could be. I hear a lot of people calling the bottom right here. I think that's a little bit dangerous, given that we've barely even closed a weekly candle on this plateau, and to be calling this the Bitcoin bottom, I think is slightly foolish, but it's always possible, right? But given what we've seen in past bear markets, if this is a true bear market, we should be expecting something closer to, a 70 to 80% drop to keep us in line with what we've seen in previous years. So if we were to do, let's say, from our all-time high, if we were to drop for a total of, let's say 75%, let's call it in the middle, right? So 75% would have us at about 17.2. If you can see that over here, 17.1, 17.2. I wouldn't be surprised if we drop, slightly before 20 and then see a reversal. And then we might play below 20 for a little bit, who knows? But the whole point of this is not to rush. We have time in this bear market, think through things. I think we can go a lot lower, definitely keep that in mind. Obviously, it's always possible we bounce. That's why you dollar cost average. But that's what I wanted to get out to you guys today. Hopefully you guys found it valuable. Let me know what else you guys want me to cover and drop a like if you got value. Thank you so much. We'll see you in the next one. Bye-bye.